You are about to opt in to Monerotopia, a show for the Monero community where all are welcome to join. From noob to maxi, no matter what bags you hold. Just sit back and relax to the sweet sounds of Monero's latest progress. Or if you're feeling inspired, join us on stage. Remember, the only thing that can stop Monero is a false belief that it can be stopped. And if you want to win the revolution faster, we recommend you remove your XMR from all custodial exchanges immediately. Warning, voting accidents are common around here. Don't forget to properly secure your private keys. Monerotopia starts now.
All right.
Hello, everyone. How's it going?
What's going on?
Good morning.
Let's get the word out there a little bit. Anybody who's watching, just if you can, tweet it out or share it. Let's get the numbers up. We got a big show here. I don't want people missing out. Let me put it in the Telegram room.
Let's do this.
Well, people missing this, obviously we'll play the recording.
Well, yeah, you can always watch the recording, but it's much better live.
So much better live. You
can
get to
feel it.
Experience all the issues firsthand.
Yes. All the issues that we have on a weekly basis. It's okay. It's what makes us special. We stand out more.
I think we're hard on ourselves. I don't think we're that bad. So what do we got? Let's sorry. Let's keep the intro fast just because we got a lot going on. So you want to put up the Monerotopia website?
Let's do that.
So yeah, guys, Monerotopia, it's coming along. It's going to be in May. Today on the show we have Cryptozoidberg, Andrey, from Xano. We interviewed him a few years ago. He's one of the renowned historic figures from the Crypto Note project, which eventually evolved into Monero. So it's always an honor to talk to him, hear his stories, hear what he's working on. He's continuing to make new breakthroughs in tech with what he's doing over at Xano with his proof of stake / proof of work mining algo. We'll get into that. And we brought MineYourBiz on the show. He's gonna come on and talk about the other side of things. Basically, I think it's gonna be a debate that takes place between proof of work and proof of stake. So it should be interesting.
Yes.
Always to clear the air as always. I think you might notice we're starting to talk to some of these other privacy projects a little bit more. It's because we want them involved. We want them at Monerotopia. Same argument I always make. I think this is just a really small space globally. The amount of people that actually truly care about digital cash. I'm not talking about the pumpers and people that want to make money. I'm talking about people that are actually really interested in this idea of building an unstoppable protocol for people to transact privately over the internet. It's a small community of people that actually truly believe in these ideas. And unfortunately, among that small community, it's been splintered, right? Because you have all these different projects. So let the projects compete, but let's also come together and align on these basic ideals. And then we could talk about the tech. Me, personally, I'm all Monero. I'm staying all Monero, and it's mostly because the network effect. You can't deny it. So it's not because of my blind allegiance to it, because it's because it's the maximalism argument, right? There's something to be said about Bitcoin maximalism. There's as much as annoying as it is, there's also validity in the fact that it was the first mover. It has the network effect. Because of that, it has liquidity. And none of these protocols have value when they don't have users and they don't have liquidity. And so that's where Monero really stands out. It's the number one quote unquote privacy coin, or I think it's the number one form of digital cash we have. People actually use it to transact. They actually go on the black market and they use it to buy things. They actually use it for its purpose other than just trying to pump up. All that being said, I think we're moving in the right direction if we start talking to these other projects more, so we can get their communities combined with ours. And so that's what you're witnessing here. That's what we have Cryptozoidberg coming on, and it should be an awesome show. If you want to see it in person, come down to Monerotopia. We have an amazing lineup already, and we're talking to a lot more people. I have people reaching out. We're actually getting to the point where it's like we're trying to like, are we going to be able to fit everybody in? That being said, please reach out if you want to speak, right? We haven't made all our decisions yet. If you want
to speak to,
definitely reach out, especially if you have something that you want to present that's, groundbreaking or, interesting, or, obviously it's got to relate to Monero, digital cash. It could be another project if you think it somehow relates. For example, we had somebody just reach out yesterday that wanted to talk, and we got on the phone and we're like, yes, we want you. It's a guy who's been selling and trading on local Monero since local Monero existed. He sounds like he's like a pretty big user, and he wants to come and give a presentation on, how to use local Monero, what it's actually like, what do you have to worry about, what's involved, the legalities of it. I mean, he's not an attorney, but he's going to talk, practically speaking, because I know there's apprehension there, right? We always say, best way to obtain Monero is without KYC, preferably with cash. Local Monero is one of the ways to do it. But, I think there's apprehension. People don't actually always then take the next step. So this guy's going to be down there talking as somebody who does it all the time. So that should be really cool. He's going to try to hide his anonymity or hide his identity in some way, just because I think he's a little concerned about that. But just an example, somebody reached out to us, we made him a speaker, and an example of, the way in which we're thinking, right? It's not just about, somebody who's working on some super newfangled tech, although we like that too. If you're a cryptographer that's published some paper that we're not aware of that somehow can relate to improving Monero, please reach out. Although I doubt you're tuning into this. You're probably working on said cryptography. But if you're somebody that's working on something that will help create a Monero circular economy, reach out. You know what this is all about. So if you're on the edge, err towards the side of reaching out, and we could talk about it and we could see if it makes sense to be there. Also, you could be there in other capacities. You don't have to be a speaker. Obviously, you could just attend, but you could have a table. We could give you a table. Maybe you want to present your project that way. So just putting that out there. And last but not least, please spread the word, guys. What's going to make this conference as good as it can be is having the place being packed with people that believe in true digital cash. So please buy tickets. Please tell your friends. Please get the word out to your communities. Maybe you're in more like you're in the libertarian community. Push Monerotopia to those people. They should become they should at least know it exists. If you're in some other privacy coin, whatever, push Monerotopia to those people. They should come down and talk to digital cash aficionados. Yeah, I think I more than covered it.
I think you
buy
did.
Your tickets. Yeah. Tell your friends.
Please buy your tickets today.
And we'll make this amazing. What else we got? Price report?
Price report, yeah.
Now, we have the news. Tony recorded the news.
Yeah, he wasn't able to join us this morning.
I'm thinking for the sake of time, because we have these two big guests, maybe we don't play the news, but then we post it after.
We could do that,
and we'll edit it into
we usually do
the
post
video.
it. We usually do post.
So we'll post it right after this,
like separately. We post the price report for those listening. We post the price report separately after the live streaming, and as well as the news segment. So if you just want to catch either one of those, you can. So
yeah, and then that will save us 20 minutes because I'm limited on time today too. I got to go.
Coolio.
Witness my daughter.
Witness
my daughter on.
That's a weird way of putting it.
on stage reciting a poem, which, no offense, guys, way more important than any of this.
Of course, yeah, you got to run to that. All right, so have anything else you want to rant about, or we're good with?
I ranted enough.
Did you? I don't think you did. I think there's more. All right, let's move on to the price segment. The Monerotopia Price Report segment is sponsored by Local Monero, Avoid using KYC exchanges. Buy and sell Monero directly for fiat, peer-to-peer. Aloha, Bawdy. Can
Hey
you hear
guys,
us?
I don't know if y'all can hear me. I'm not able to hear you through the StreamYard link.
Yes.
So I
we
don't
hear
know.
you.
I'm not sure
Yeah.
how this is going to work.
Yeah, we can hear
Maybe
you.
send me a Telegram message if you can hear me right now.
Yes.
Yes, we hear. Why can't you hear us?
I don't know.
Mm,
Perfect.
okay.
We hear you.
All right. Well, that's great. Then I'll just go ahead and push with the price report. And if y'all want to come in with some questions, I'll keep my my Telegram pulled up on another screen. So today, I kind of wanted to talk more about macro today, particularly because next week there's a whole bunch of big numbers coming out. So let's first, we'll just start off with Monero. Nothing really exciting happening except for like the same trend is continuing. We just strength all the way up. We're now trending on what was a resistance line. So that's lovely. We're still hanging out inside of this rising wedge here. And it looks almost like we want to push higher and bump out of that. When you're in a bullish spot, it is very possible to actually break these rising wedges to the upside and then go even higher. That does happen in bull markets. Normally, rising wedges are going to be a bearish structure. You're going to eventually break down to the bottom and then go down. But in a bear market, that's, when you see rising wedges in a bear market, that's typically something you want to be worried about. But to me, Monero XMR BTC is in a bull market. So rising wedges in a bull market can very often be bullish structures and not necessarily bearish structures. So yeah, there's not a whole lot going on here with since last week for the Monero price. You can see dominance took a nice bump here. And this is the weekly chart, so that's a very long time frame. Now again, as we've been talking about, we are coming up on this long-term resistance line. So that again, it could pose some challenges once we get there. The divergence is not too much happening. Binance has actually been above Kraken's price lately. That's with the volume adjustment. We take the volume adjustment out. we get to see how Poloniex, for whatever reason, just tried to diverge their prices down. So again, the fact that Binance is actually doing volume above Kraken's price, this probably does have something to do with our continued strength, our continued price strength. So yeah, with Monero, there's not a whole, like I said, not a whole lot going on. The longs and shorts, they're still basically at parity. There's about as many longs as there are shorts, but in reality, there's just very few positions open compared to what we've seen from Monero in the past. So before we talk about all the economic numbers that are coming out next week, I thought it would be a good idea to touch on the reason why we use log charts. There's often a debate, should you use log charts, should you use something else? And to me, the answer is pretty simple. This is the M2 money supply. Now, for those of you that don't know what the M2 money supply is, it's a measure of all the US dollars in existence. And you could kind of put quotation marks around US dollars. So M2 money includes M1. So starting with M1 really is probably the best place. That would be cash, coins, and checking accounts. Now, they reclassified savings accounts as M1. It used to be classified as M2 money. They did that in the middle of 2020. So that made M1 spike up like crazy. In fact, maybe I can show you that. Yeah, so here's, so this spike right here, let's go to the log chart. This spike right here was actually just the reclassification of savings accounts as M1 money. Okay, but anyways, so the thing is that M1 is all checking, all savings, and all cash and coin. M2 money includes time deposits that are less than a year. So you're talking about like CDs, money market accounts, and there's quite a lot of money wrapped up in all that. In fact, there's more money wrapped up as time deposits than there is in just regular cash and checking. So now the reason why we look at log charts is really simple, because the monetary system is logarithmic in nature. Logarithms are how you deal with percentages. So like in when you do like basic economics in college, whatever, you'll learn about how these equations are done, and effectively log charts help you deal with percentage increases every year, as opposed to I don't know, just natural, natural scale. So the reason that we use log scale is because the economic system itself behaves logarithmically. It behaves as a percentage every year. They target inflation to be 2% every year. So that's inherently a logarithmic chart. So that's why we use log scale. But the other reason is also, maybe we'll go to a regular old, if I can find it. There we go. Here's the NASDAQ. And actually, maybe we should just go to the S&P 500 because that has a longer price history that goes all the way back to the early 1900s. Okay, so you're looking at a very, very large chart here of the S&P 500. And you can see I kind of, drew some lines here, whatever. But essentially, you can see that this goes up in kind of almost a straight line over very long periods of time. Whereas if you change this to a regular scale, right, you can see that you just don't get any resolution here on the bottom. Like there's a lot of interesting price action happening down there, at least in terms of percentage, right? How price is changing as a percentage relative to what it was previously. So you lose resolution on the low end, and then you only see the exponential part of that. So you have to use logarithm because our monetary system is an exponential process. So sometimes it's reasonable to use a non-log scale, like when you're looking at something like the dollar index or Bitcoin dominance. Right, those are charts that are range bound, so they're not necessarily subject to the kinds of exponential process that most of the rest of the economy is. So okay, with that in mind, just so that you guys can be aware, we have a lot of big economic numbers coming up next week. This is going to be a really big week for me personally, and when I rebuy, if I intend to rebuy. So we had the producer price index. That was on Friday, so just yesterday. And that's the white line right here. Let me expand that. So that's the white line right here, and that came down. That's good. We want to see these inflation numbers coming down. That makes it so that the Fed can pause their interest rate hikes. Maybe they don't have to raise it as high. So that came down. That's good. Maybe we'll also see these numbers coming down as well. The core inflation is the main one that they look at. So that would be the line in blue here. That's the biggest number for the Federal Reserve in terms of what they're looking at for inflation. So on Tuesday, we're going to get the the consumer price index, and with that will also be the core inflation. We're going to get the unemployment numbers. Now, it's probably no one here really listens to Jay Powell when he gets up and just talks at length about the economy. But in his last meeting, he talked about how unemployment and labor demand is one of the big things that drives inflation. There's a very high demand for labor, and there's not a lot of people that necessarily want to go back to work. So that is causing a problem. There's not enough people producing all the stuff that we use. So he kind of puts it in a corporate way that sounds nice, but really kind of, if you read between the lines, he's kind of saying, yeah, there was too much mad gains happening. Too many people retired early, more than would be expected from demographics alone, people getting old and retiring. So essentially that was because of all the money they printed. So they're very well aware of that. Yeah, we've got the inflation numbers coming out. What else do we have? The Fed meeting is on the 13th. So that'll be, it's on the 13th and the 14th, but they release their press releases on the 14th. So that's a Wednesday. So next week is just a really big week. If we see the inflation numbers coming down, if the Fed maybe only hikes 50 basis points or 25 basis points, maybe they throw the markets a bone. Maybe they give us some forward guidance that highlights the potential for pausing, stuff like that. That's kind of what we would prefer to see if you want to be in risk assets. So then we could just go ahead and take a look at the crypto market and as a whole. So, again, still things are just kind of moving flat. Like we talked about last week, mildly positive. We had a bit of a dip this week and then it came back. So, things are ultimately just flat for the most part. So that was total. This is Bitcoin right here. Again, flat to mildly positive. I want to also talk about Bitcoin dominance. In fact, what I wanted to show you guys today was to do some comparisons between crypto versus the stock market, and then also look at Bitcoin dominance with some adjustments made. So the line in orange, that's Bitcoin dominance. The line in gray here, that's going to be Ethereum dominance, and then green is stablecoins. That's stablecoin dominance. Now, there's a lot of adjustments that you can make. So if we make no adjustments and we just show, let's remove stablecoins for now and remove Ethereum for now. Okay, so quite simply, this is Bitcoin dominance, right? Maybe we could try and draw some kind of trend line here. That could be possible. But anyways, the point of this chart is not so much to try and draw trend lines, which we can do. Maybe we'll look at that in a second. But the idea is that we really need to make adjustments. There's about 20 to 25% of Bitcoin has been lost forever. By the time that Ethereum and Monero and these other coins came around, people had realized just how important it was to back up your private keys, to back up your seed phrase. In fact, seed phrases didn't even exist when Bitcoin was invented. So they had to make that because of people losing their keys. So the reality is that, okay, there's maybe 20 to 25% lost Bitcoin. Who knows, maybe there's like 5 to 10% lost Ethereum and a lost of Monero. So I say we can make this adjustment around 15%. What we're going to do is we're going to subtract those Bitcoin out of the equation. And the other thing that we can do that people, especially maximalists, will say, hey, that's not fair. You have to subtract stablecoins from the calculation too, because they're just, on the one hand, they'll be like, no, printing stablecoins doesn't matter, and that didn't cause anything to happen with price. And then on the other hand, they'll be like, no, that's not real. Those don't count. It's kind of like, it's kind of hard to have it both ways. Okay, but anyway, so we'll subtract stablecoins. We'll apply the adjustment for lost BTC, and the chart doesn't really change too much, right? Let me do that one more time. It's like that. So the reality is that stablecoins aren't really affecting the dominance calculation that much, which I think is something important to point out because I've heard Bitcoin maximalists try and use that as an excuse. They'll be like, well, you have to subtract the stablecoins. That's not fair. But when you do, you see that it doesn't actually make much of a difference. So the other thing is that I want to show the Ethereum dominance and also the stablecoin dominance because stablecoins are increasing as a percentage of the total market cap. Now, with Ethereum, I think it is fair. We should include total value locked. There's a lot of coins, there's a lot of tokens and stuff on Ethereum that do a lot of things. And that does represent some kind of economic value. It does represent interest that people have. So we should include the TVL in Ethereum's market cap. And you can see that, we're not really looking at that big a difference here. There was a period of time where there was only about a 10 to 15% difference this bull market between the Bitcoin and the Ethereum market cap. So what I like to say here is I like to talk about when Ethereum gains parity, because it's not so much like people like, oh, the flippening, but that's more of a meme, right? What we're going to see happen here probably is Ethereum and Bitcoin are going to start kind of dancing, right? We'll see where they're sort of flippening each other for a while, but it's really more like market cap parity. Now, I tend to think that's going to happen here in the next few years. Ethereum just serves some very basic desires of cryptocurrency, one of which is, let's be honest, degenerate gambling. I am no saint in that regard. But Ethereum does do that, and it serves stablecoins, which we can see here in green. So stablecoins are increasing overall. Now, this includes Tether, USDC, Binance USD, and I didn't include DAI because DAI is pretty much backed by USDC and Tether and a few others. So I just figured that, the big ones, just include the big ones. There's a bunch of other little ones out there, but they really don't make much of a difference in this chart just because they're such a small percentage. So that's what Bitcoin dominance looks like and Ethereum dominance looks like when you make these various adjustments. The other thing, this is a chart that I think is just a beauty. It's the Bitcoin divided by the NASDAQ. Now, you can kind of see, we're going to take a little historical look here. So what we're looking at here is 2014 to 2015 bear market, and then the bull market that ensued. You can see that these levels here are actually quite remarkable. The way that that price tended to come back to particular levels. So, for example, you can see here the peak in 2014. That became significant later on the very first pullback. So Bitcoin in 2017 broke through the, and again, this is a ratio. We're taking Bitcoin and we're dividing Bitcoin by the NASDAQ. So that means that Bitcoin is becoming relatively more valuable compared to the NASDAQ as this chart goes up. And so you can see that, this spot right here was very important when the first pullback happened. And then you can see that the very first peak after Bitcoin broke through its previous all-time high, that next peak was a very significant spot. That was basically where the bear market bottomed. And we can see this kind of all the way up. The next peak that happened that ended up being the temporary floor that Bitcoin hit for the bear market. And then that was basically the floor in 2020 before we went on the next bull run. So this is a very interesting chart. I think it's worth it's worth your time to look at and to really sort of scrutinize and see what kinds of trends you can find here. So right now we're essentially sitting at the same levels as the little mini bull market that happened in 2019. We spent pretty much the last, I don't know, almost the last 6 months hanging out in this zone where Bitcoin kind of peaked out in 2019, June of 2019. And, you know, this chart, this doesn't look so bad. Like, it looks like, okay, we had that big red candle right there. It's hard to say exactly, you know, where things are going to go from here. Let's go ahead and take a look at the overall statistics. Yeah, those don't really tell us a whole lot either. At least at the moment, this chart doesn't show us too much for what price might do at the moment. One thing I would maybe be a little bit concerned about is that this spot right here could now become, this could now become resistance. 1 second, there we go. So essentially we fell below this pretty important, and again, this is a weekly view, so the weekly close happened right there. It's a natural spot to draw this line. That was also kind of similar spot where we paused for a moment before going into the bull market. So my only concern is that this could become kind of resistance for some period of time. There's also the potential to actually come back down further. So that would be another minus 17%, not in the US dollar price, but again, 17% less valuable relative to the NASDAQ. We can do the same thing with total market cap. Let's see, we're on the weekly. So this is the total crypto market cap divided by, so we're actually dividing this by the Vanguard total stock market value. So instead of dividing by the NASDAQ, we're just taking total and dividing it by all stocks. And that's what, so Vanguard is one of those like aggregate, what's the total value of all stocks. So, you know, we can do the same thing here, and it looks pretty much the same. Although you'll notice that we still have a little bit of ways to go down before hitting the 2019 blow off, the little mini bull market right there. So it's foreseeable, it's reasonably possible that we could come down here, especially because the stock market has been showing significantly better strength relative to BTC. So let's find my stock market charts. We'll look at the NASDAQ. Actually, no, we'll look at the S&P to start with. Go to a shorter time frame. So, okay, this is the S&P 500, and you'll notice kind of right here, we topped out as we touched that resistance line. This is the overall bear market resistance line. I do think we're going to break this at some point, but I also think that this is a bit of a rising wedge structure. It's not entirely a wedge. You could draw the line maybe more like that. But at any rate, I do expect us to have one more pullback. This yellow line right here, this is the top of, this is like the pre-COVID stock market highs, the pre-COVID 2020 highs. That's what that yellow line is here. So this has been a target of mine for quite a long time. Maybe we don't get there, right? Maybe that's too prominent of an area. People start buying it, people front run that. It's very possible. But I do expect that we are going to take some kind of pullback here, either December, maybe January. But I'm seeing everything is setting up for a big move next year. So again, as I've been saying for the past few weeks, I expect us to make some kind of pullback. We will probably touch this line, break the bear market resistance line, and then actually go for a pretty big run next year. That's kind of a more long-term view. NASDAQ. So what's interesting here is the NASDAQ didn't actually touch the resistance line, the bear market resistance. It kind of stopped short and hasn't got there. So it is possible that we could kind of just chop sideways for a while, maybe something like that, take a pullback. So I don't know exactly when this pullback is coming, and I wish I could say that with more confidence. But realistically, the numbers that are coming out next week in the Fed meeting next week, that's going to drive, for the most part, I think that's going to drive what will happen for the next month or so. So next price report I have for you guys, we'll talk about the Fed meeting and what I think that means for where risk assets are going to be going, like crypto. And then finally, we can just take a look at the relative movements from the past week. So crypto overall, so you can see that we kind of started the week nice, we pulled back, and then we came back to neutral. So again, everything is just kind of flat. Nothing really too big is happening here. So just keep on keeping on. If you're DCAing, that's probably not a bad idea to be doing right here. I'm still going to wait to see what the news is next week on the financial numbers, but there's a good chance that I could start buying back some more of my crypto positions as the news comes out. So, but hopefully, if anyone has any questions, you can shoot them in the chat here. Doug, Sunita, I can't hear you guys right now. So actually, you know what I'll do? I'll turn up my volume on the YouTube. I can do that way.
You can hear us now?
I don't think you can hear us.
Well, Bawdy, great job.
job.
As always, I'm actually going to go back and listen to this press report again when we finish the show because it was slightly distracted. All I gathered was Monero's looking good. Looks like we're nearing the end of the bear market. Good time to accumulate. Sounds good to me.
Sounds good to me.
Let's move it along.
Yeah, let's
Bawdy
move
can't
it
hear
along.
us.
Just okay. Yeah.
People
Thank
that
you,
are
Bawdy.
listening in the Twitter Spaces, if you can, tweet it out, like the chat. Let's get it out there. We're about to start the
people that
are listening.
Oh, we hear him. Yeah, I think he's like trying, but
yeah, Bawdy, just turn your thing off over there because we could hear the sound. But yeah, people listening in Twitter Space, just please retweet it, get it out there so we get a bunch of people in the room. We're going to have the conversation with Crypto.
Sorry, I unmuted myself for a second. Anyways, thanks, guys. I'll see you guys in the Twitter Spaces later on.
okay, cool. Thank you.
Bawdy's on another planet. How can you hear us?
I don't know why.
Like,
usually
what
it's
changed?
fine. Nothing changed.
We'll have to talk to him about that.
Yeah.
We can never have a
No,
smooth
it's
shot.
okay.
There's
Never.
always
This is-
something.
Just deal with it. Just embrace.
It's part of the charm.
crazy.
It's
Yeah.
part of the charm.
It's like for the people that have been watching it and following us for years, they know it's like we've improved signimently.
I mean,
but
we're
we
doing
always
a
have
lot of
issues.
things here with the spaces
Yeah.
and everything. So there's
Yeah, I think my computer's tired.
we
Also,
definitely make it more complicated.
I think
than
my
we expect.
computer is like slowly dying because it's tired.
We need a
from
new
all the
computer.
work. It's yeah. I think it's
It's
obviously.
time.
It's time.
Time to sell some Monero. Buy a computer. Obviously with Monero. So let's go ahead. Let's move to the guest segment. Let's get it going.
Yeah, let's get it going. All right, sounds good. Let's do this. The Monerotopia guest segment is sponsored by Cake Wallet. Store, send, receive, and exchange your Monero and Bitcoin safely on iOS and Android too. Cake Wallet is open source, and you always control your own keys. Oakley dokley.
All
Hi,
right.
guys. How's it? I muted you. Mind your biz. Sorry. You can unmute yourself. I can't.
Oh, thanks.
Hey.
So I had already seen.
I mute everyone just in case.
Wow, they're here.
Hello.
They're here.
Yeah, been a while, Andrey. If I recall correct, it's been a little over 2 years since I interviewed you. It was your first public interview over on MineYourBiz.
Yeah.
I appreciate that the Monero Talk. Right? Yeah. I had another controversial person in the crypto community, one Nicole Grinstead, Nerd Girl. She's kind of a noted hexagon contrarian, if that's a thing, right? Like, an internal both apologist and contrarian in the hex community. Yeah, we interviewed you a little over 2 years ago, and I appreciate, Doug, that you did a follow-up interview with Cryptozoidberg. I think maybe 6 or 7 months afterwards. It was good.
Yeah, I don't remember the dates, but yeah, I think I learned about Andrey, I guess, through your interview. So anybody who's not already, are you still putting out a lot of content?
Yeah, I mean, not as much as I used to. It's not a regular cadence. I don't take regular sponsorships, but I do. It's because I work in crypto media, right? So I wound up brokering deals for other creators.
Well, any of our people that are watching now that don't yet know you, which I don't think that's the case. I feel like everybody that knows Monero Talk already knows MineYourBiz, but if you don't, go follow this guy. Thanks so much, man. So I don't think you've ever been on Monero Talk or Monero Talk, right?
No, I haven't been. Yeah, it's weird though. Like I haven't been on what Bitcoin did either. I generally speaking, if there's a maxi bent to the show, I am not usually invited.
Oh, okay.
Yeah.
Well, I guess there's a maxi bent here, but you're always invited, man. You're more than welcome to join at any time. I
much appreciated.
I really enjoy your stuff. So we have a huge show here today. I think this is awesome that we got you. This started as a tweet. I think Andrey had put out a tweet that he wants to revolutionize Monero, make it proof of stake, and there was a whole bunch of back and forth banter, and MineYourBiz, I think, came on and mentioned that he would be happy to argue why that's maybe not the best idea, and it turned into a show here. So do you guys want to each maybe state who you are in your backgrounds before we go into breaking down the issue? Andrey, go ahead.
Yeah, I mean, I was just reading the tweets. My Twitter is full of Monero followers. It's somehow Twitter keep suggesting me Monero people. So everything I see in my feed, it's connected to Monero somehow. And I saw the post. I was just suggesting to use proof of stake because I believe it would help Monero a lot. But proof of stake often connected with a lot of mystery and legends, and I always have to fight this. So that's lead to this show, I guess.
Andrey, please just give a quick intro of yourself, though. I know we're just assuming everybody knows. We mentioned at the outset, but if you just kind of describe yourself a little bit.
Yeah, I'm a software developer. I was working on original CryptoNode code base at the very beginning, and then I left this project that was called Bitcoin. Some people know this way, and launched my own project Bullberry, which I was trying to run. And then I made another project, and we did a coin swap from Bullberry, the project called Zana. It's what we're doing now. That's how we innovate in the privacy. That's what we do.
Awesome. And MineYourBiz, why do you know so much about crypto, man? You're like, you know it all. What's your
Ooh, danger, Will Robinson. First off, thank you. You're very, very kind, Doug. As you know, after talking to a lot of people in the space, nobody knows it all, right? Like there's always something more to learn, and the rabbit hole is so deep and so interconnected. So appreciate your kindness in having me on the show. And it's so funny. Like Andrey's humility is exactly what I remember of the interview with him from a little over 2 years ago, where he's like, "Oh, no big deal. I just helped with the original CryptoNote spec and in implementing the original CryptoNote spec. Just happened to revolutionize privacy coins by accident." So I love that about Andrey and being able to chat with him today is really a treat. My background is in corporate training. I worked for several Fortune 50 companies: Microsoft, Google, Samsung, Dell. So being able to do large group training facilitation, have a room full of 50 people or 200 people, 300 people, a small arena full of people, and helping them walk away with key talking points about technology that they need to go either implement or sell. That was what I did for a number of years. And after a particularly strenuous push to get Microsoft Windows 10 delivered, we had the highest uptake of any release of Microsoft Windows to date, the team that I worked with. And in no small part, thanks to our training, the way that we went and won that mind share, it was the fastest opt-in of any upgrade of Microsoft Windows. Well, I'm also kind of a closet free and open source software maximalist. I love Linux. I run Linux at home. And except for when, like on this device where I'm running Mac OS, only using Homebrew, by the way, totally anonymously. But being this sort of free and open source software fanboy, it kind of gnawed at me like, what have I done? As we started to see that there was so much more telemetry that was baked into Windows 10, that as a platform, the OS was kind of designed to erode our privacy, right, and our anonymity. I kind of felt the weight of conscience and was like, oh my gosh, that's kind of evil. Parallel to all that, I had a couple brothers that they created a multi-coin mining pool back in 2013, told me all about it, said, hey, Seth, you got to get on board of this. You got to learn about cryptocurrencies. Start with Bitcoin, branch out from there. At that time, didn't have many options, right? It had to start with learning about Bitcoin, and then yeah, the rest is kind of history. I witnessed the agony of defeat as one of my brothers, failed to get in on the Ethereum ICO and get some massive returns for his portfolio there, and then after that really big push to get Windows 10 out, I saw an opportunity to get involved in mining content, and then just media production and marketing within the cryptocurrency ecosystem. So I ran at it full speed ahead because I could feel good about it. I realize it's a roundabout way of explaining my background, but
no,
that
was great, man. So what is kind of your whole I feel like we'll have to do a separate show as well. I need to get you on a Monero Talk. But what is kind of your current take on crypto? Like what are the projects you're most interested in and why?
Wow, that's a tough question to answer because you have people, especially now in the so-called build market, right? Right, like legends don't die, right? Especially in crypto and code, right? It lives forever, for at least for as long as the libraries are valid. So you might have to do updates there, but there are projects like Zato that still have my attention. I talk about them on a regular basis when I do my live streams, and I let my audience know that some smaller teams are still building and they haven't given up. But I do leave the door open for projects like Chia, where you have developers that did really meaningful work a lot of years ago, and now they're trying to bring something of value into the blockchain ecosystem. And so I'm hopeful that projects like that will be able to innovate and actually offer something of value. But it's so hard to tell with some of those that are still kind of riding the hype train of the last bull cycle and who got an injection of a lot of VC money. So I struggle to say that I'm like really excited about something that's some unique project. But the main tentpole cryptos, right? Bitcoin is supposed to be sound money, right? It's supposed to have that fixed monetary supply that really appeals to people, to the libertarians, right? To the Ron Paulites. So I've always got a soft spot for Bitcoin. It really is kind of everybody's first crypto love. And then Monero, of course, because Monero fulfills on the promise of anonymity, right? Inherent anonymity and fungibility that everybody thought was available with Bitcoin. So like that doesn't go away either. But ironically, I'm also starting to find that I like the analogy of Litecoin as silver to Bitcoin's gold.
Oh, wow.
I used to hate that. I really did. And then, well, here's why. I feel like I really have to explain myself here. So with Litecoin, because it's merge mined with Doge, you know that the excavation process and the mining process for silver, you're familiar with it, yeah? In real world?
Probably not to the degree that you're getting to. So go ahead.
There you go. So with gold, though, there is an industry that's dedicated just to mining gold, right? In the real world. Mm-hmm. Silver doesn't have that. Silver is a byproduct of mining other minerals, of mining other materials. So that for me, kind of, I don't know, a switch just flipped in my mind. I was like, oh my gosh, Litecoin is currently merge mined with Doge, which has all this love from, characters like Elon Musk. That's kind of similar to silver in the real world, where it's totally a byproduct. At this point, it's almost like a byproduct. And I think that Litecoin can exist in that environment of merge mining, but maybe not in any other.
So Charlie Lee just saw the future. He knew that one day Doge would take off, and he would just be a byproduct being mined alongside.
Oh, he saw the future at the end of 2017 and sold those bags for sure. But yeah, I don't know what other insight he had. We'll see.
That was an amazing move. That was an amazing play by him. I got to give him congrats. We get the applause going for that. All right, so that's a good overview, and now. That's a good overview of where you're at, because I wasn't exactly sure where you kind of stand on cryptos. I know you talk about Monero and everything, but I wasn't really sure of your overall stance.
Yeah.
So this convo is about proof of work versus proof of stake. What is your take there? Can they both exist? Are there benefits to proof of stake? Are we going to see proof of stake coins succeed? Or fundamentally, does this stuff need to be proof of work?
So I'll jump in and just offer my thesis very fast. The reason that I wanted to take this up is first off because I respect Andrey enough that that I know we'll have a great conversation and debate today.
Yeah.
But my thesis is, no, it's my pleasure, man. Anytime. But as far as my thesis as to why I think that proof of work is we're going to see this bear out in the next, especially election cycle here in the United States. Why proof of work is so important is that there is a growing narrative of so-called ESG and compliance that of a necessity will force blockchain projects to kowtow to government interests. ESG is a growing narrative that we didn't even hear about 5 years ago. I mean, I'll challenge anybody in your audience, in your chat, to let me know. Did you hear the acronym ESG as it relates to political concerns 5 years ago, or the last time that you went to cast a vote in the United States? I don't think you did. And if you're across the pond in the EU, I doubt you heard it 5 years ago either. But it's become all of a sudden extremely important this election cycle. Why? I contend it is because it is another means of control, and projects that move to proof of stake line themselves up to become more compliant to those government demands. Proof of work does not need to give in to those same government demands. And proof of work offers that level of censorship resistance and transactional censorship resistance that's necessary to maintain decentralization and permissionlessness.
Beautiful. I don't know, Andrey. I agree deeply with everything MineYourBiz just said. But please,
he's thinking.
Tell us.
Yeah. Well, I'm not familiar with the political obstacles about this stuff. I'm not really not even think about this, because what we do is we building technology at first, and we solve the problems, like technological problems, and what we're trying to do is to avoid rewriting of the transaction history. That's why we need a consensus. So what we do is we're trying to make the code, like there's no such thing that you can protect it like forever. You can just make this more expensive, the cost of attack more expensive. So what we do in Zana is trying to make this attack more expensive. And that's why we still have a proof of work and proof of stake. But the reason we have a proof of work still, that's the reason why it's a hybrid system, because we have to protect ourselves from a long-range attacks. That's how we protect ourselves. And that's my primary argument. That's why we use proof of stake. I would love to hear about this, but what you're trying to say, that the government, how they exactly control your consensus with this stuff? Can you give me some details?
Absolutely. So here's one example, is that here in the United States, our Office of Foreign Asset Control, which is a division of the U.S. Treasury, has put the smart contracts that were used by the Tornado Cash developers, which offered fungibility on the Ethereum network for several token pairs. They put it on a blacklist, and they have essentially said that any U.S. citizen that's found using them is breaking the law. That has created, at this point, it's created a cascading effect within the Ethereum community, where now the validator infrastructure of Ethereum, since it's gone to proof of stake, has censored those smart contracts. They weren't asked to directly. The legal system didn't even ask. There were no subpoenas. There was no due process from the political machinery there, right, of this Office of Foreign Asset Control. There was no direct request for them to do that. But in out of an over-eagerness to show compliance, they censored them anyway. And I worry about that becoming a growing trend. And I mean, frankly, even if they hadn't just volunteered to do that, if the request did come from those government offices, I think that the fact that they already did so preemptively proves that I think it's something like 70% of the validator nodes that have already censored those smart contracts. I think if the request came out officially, it would be nearly 100% compliance.
Yeah, I agree with this, but I think this happened because the model that they have on the Tornado Cash had a really weak point with this censorship. For example, some of the stable coins, they have a blacklisting, and it's also our concern. We were thinking how to bridge liquidity from Ethereum network into Zana when we deployed assets, confidential assets, and we cannot use the classical custodian bridge anymore because it can be blacklisted anyway. So, but I still believe it's a problem, like technological problem of Ethereum at this moment, because they have this this point of weakness. What we do on our side, we mitigate these problems, like we don't have addresses anywhere seen. We have everything hidden, and the proof of stake, the way it works, nobody knows who confirmed the block, by which amount of money it's confirmed. It's everything hidden. So from this perspective, we fighting the same thing. We try to keep it decentralized and with like keep it free from censorship.
Okay, so I definitely hear that, and I see some comments coming in as well regarding a willingness to change consensus, because that can happen as well. I mean, a project is only as strong as its maintainer, right? Like being able to just ignore certain pull requests and ensure that that there is a direction that the project is growing towards that that allows for that level of censorship resistance. So, and I know that can be the case for any consensus model, but the biggest concern to have that macro thesis is just that the ESG narrative that's growing across many different countries is that I think, and let me be more clear, because I didn't quite connect the dots here before. I think that the reason that political figures and the media in particular are pushing this narrative of ESG is because they want for us to feel like we must conserve power and energy in exchange for some, I don't know. They haven't really actually proven to us that us not using electricity will definitely save the planet or, you know, or govern the people better. But they indicate to us that this should be the case. And I think the reason that they're doing that is because they want for these systems to move to, well, relatively centralized proof of stake systems in which the only means to vote necessary is ownership of the token. Well, governments are very, very good at printing derivatives and printing money. And with that initial fiat printing, they can purchase those tokens. Those are instead of the cost of a 51% attack, which would be ongoing in order to maintain full ownership of a chain, and the new fork, hard fork, a contentious fork of a chain, which is costly over time because you have to maintain it. You have to maintain those costs ongoing. Just owning the tokens as a simple game theory principle for current world governments and their programs, much easier to achieve. Certainly here in the United States, right, where we've printed so many, like we printed many multiples of the total crypto market cap. Yeah,
but then they can print the same money and to buy power rate or power like hash rate or rent hash rate with even cheaper price. It's easier. Maybe. Like I mean, perhaps. If we talk about control, I don't think governments at all care about electricity or ecological problems. Honestly, I think they care about control at all.
Correct.
And from this perspective, I see proof of stake more decentralized than proof of work, because in proof of work you have people, participants who has less skin in the game because they bought or rented hardware. They can mine any project they want, and they just did some investments or rented it. As I told, it's like Uber, and I know it because my early project, Bulberry, I suffered a lot. It was the first project was proof of work only, and we suffered a lot from unfair play because proof of work miners come to the project, they can swell your hash rate, they can commit a double spend and they lose nothing. They just have a profit. While if you have a proof of stake, the coin holders, even like we know that there is nothing at stake problem that Vitalik explained it, but as soon as you have major holders, that's never going to happen, because they bonded with the project. If they do something bad to the project, to consensus, they will lose way more. So I see like there is a lot of like bad implementations of proof of stake where people just pretend to be decentralized, but actually they control the network, because like they have a validators, bunch of servers which actually control the networks. And because of this, a lot of people started to think that proof of stake is equal to decentralization, but it's not true. It's not accurate. The idea of proof of stake is just to make holder of the tokens to become validators, to become the participants of consensus. That's the idea. And I believe it gives you more decentralization. Also, from my experience, when you have unfair behavior from proof of work miners, it's where people just they bought some like expensive equipment. They want to make money from this. Of course, it's a business. They go to the pools, and those pools are just managing this hash rate. They see by themselves which are more profitable to mine. They go to these projects, do the mining. And I saw like they've been hurting a lot of projects, especially in the early days when it's been a lot of projects who had a difficult adjustment window, like it was on a Bitcoin for 2 weeks. And can you imagine the weak project, the small project with a small hash rate? Some big pool come to this project with low difficulties. They do the mining for 1 minute. They rise like they mine, hold this 2 week supply in a few minutes, rise the difficulty to the sky, and leave the project. And then the project is dead, like because after the pool left, they cannot mine like any blocks. So I saw a lot of really violent behavior from proof of work miners, because they mostly don't care about projects. I can tell you like even more stories about proof of work hash function optimization, while it was also killing a lot of projects with this way. So it's quite wild. And that's the main reason why we brought proof of stake, because I was like reading a lot of stuff about that. And also, if you follow the articles of Vitalik Buterin, he was also was writing a lot about proof of stake. The evolution of proof of stake are now brought us to more consistent technology. It's more complicated. It's really hard to implement, especially in privacy blockchain. It's like really hard to deliver proof of stake in a privacy chain, especially preserving the privacy. But that's what I believe is more reliable.
Oh, yeah, absolutely. So I know one of the earliest forks of Monero that implemented proof of stake, I think it was Cutcoin, that, yeah, they had a very difficult time. A couple others as well that tried to stay much closer to the fundamentals of Monero without making the larger departures. And I know one of the things that I respect about Zano is that you have made an effort to create a divergence in development and not have it just be right where you're riding on the coattails of the Monero developers and just implementing a few small changes to have your own consensus model. So I've been monitoring the launch of your project. Well, since launch, I was a week 0, a week 1 miner of Zano when it was pure proof of work. So I appreciate the effort that you put in. What I'll say about proof of work and some of the relative violence, as you mentioned, of violence of action, right? In intensity. Intensity and violence of action. No, I know what you mean though, right? It's a lot of hash rate. I mean, if you did translate that into kinetic energy, it would be violent actually with the amount of energy that's being used. So yeah, it's pretty intense. I'm going to say something that sounds almost like technological Darwinism. So please don't take this personally.
I totally agree with this. I mean, that's the one of the things I like about crypto, because of this, weak projects just die, and that's probably a good thing about crypto.
Yes, and so it's very difficult. You have some projects that attempted to innovate proof of stake models early on, and I'm talking about like some of the like proof of stake 3.0, right, with Blackcoin. They still had the fair launch mechanics of proof of work before they transitioned over. You had some others. I don't want to say anything bad about any specific projects, but there are some projects that have been essentially limping along this last market cycle that innovated in proof of stake, but could not find the strength of in the marketplace, right? Of a solid use case, daily utilization, regular usage in commerce, or whatever the use case was, micropayments, remittances, whatever they aimed to fix, they couldn't quite get enough wallet adoption and real world daily usage. And so it doesn't matter how many bots they had doing wash transaction back and forth daily to try to fool retail plebs. They didn't really have the use. And so they didn't get the adoption that they needed over years, and they just limped along. And they're just sort of like this this blight, sort of this wart on the face of crypto that just won't go away. And it just needs to be excised, right? It needs to be brought into a doctor and removed. Unfortunately, some of them. I don't think that's the case with Zano. I think you are building something of real value. Well, in the case of many other projects, so what I'm saying is proof of work sorts through that. And so if there is a violence of action and it almost seems malicious, proof of work has a way of sorting through that faster. And I forwarded over to the hosts. I'm unable to share because I don't have, I've got a very restrictive environment on my computer. Otherwise I would have offered to share my screen. But there are a couple of sites. One is crypto51.app that was set up by a developer who just wanted to pull in some of the on-chain data and some of the Oracle price feeds to show how much it would cost to execute a 51% attack on various different chains. This is just a fun, it's a fun tool. It's not perfect, right? Let's just agree. But there's a lot of problems with data feeds in crypto often, right? We're always struggling to find the best data. And Monero is missing from this list, strangely.
Why?
I don't know. Yeah.
Do you think it's not? I mean, every proof of work consensus, if it's classical Satoshi consensus, which Monero is, and it's really easy to calculate. You get the cost of the block reward, multiply the confirmation, and that you have the price of the double spend attack. And that's where proof of stake also wins, because if we do the quick calculations, the math will not let you lie. The cost of attack in any proof of stake project or hybrid will be like maybe 100 times more. I mean, you still can do double spend attack, but it's so much expensive. Like, it's crazy. Right, probably you won't be able to do this.
Depending on the consensus, the consensus model, if you need to have, say, like a 2/3 quorum vote within your validator network, or depending on how you have your proof of stake set up, if you get to a certain point where it's like, well, we need 80% consensus from this before we can do a double spend. At what point do we start to just agree that you're looking at the same level of consensus of just a centralized server with fallbacks, right? Why not just use Docker on AWS?
No, it's confusion. It's not accurate, actually.
Okay.
The first of all, validators, I want just avoid confusion, because there is two general, as far as I know, two general models of proof of stake consensus. The first model is what we use is statistical model, where everyone who has coins has a chance to confirm block. Everyone can create block. It's statistical. More money you have, more coins you have, more chances, more often you create the block, but everyone has a chance to create the block. Or other family of consensus algorithm, which is based on Byzantine fault tolerance, where normally you have a bunch of validators who locked some coins to become a validator, and that's type of consensus. They tend to be centralized. I would agree with this. They have a pros and cons. Cons is because it tends to be centralized, because it's limited to some number of people who has the most balances, and they between each other they do this validation. It's still very expensive to attack this, but it's centralization.
Right.
But they,
I guess
they have features like finality and stuff like that, which also really cool from like finance perspective.
Right. So I'm gonna latch onto that last word you said there with finality. The issue that I have with being able to seize the means of attack for a proof of stake network is that once they are seized, it is final. So let's set out just
what do you mean by seized? What is it?
So taken. So let's take, for example, some
Taken
of the
money?
yeah, oh, no,
control.
forcefully removed. Yeah, forcefully removed from another person, seized.
Money.
So,
I mean,
oh no, I'm
how
talking
it's-
about just the means of production. So between those two camps, proof of work, the means of production would be mining, hash rate, and it doesn't even matter how you achieve it, right? We can go take alien technology, and if it can hash SHA-256 faster than the current iteration of ASIC chips from Bitmain, then that's what we're using, right? We want the alien technology. We don't care about Bitmain anymore. In the case of proof of stake, we need ownership in the token supply. And so the issue that I take with the game theory between the two is that once a foreign actor or a bad actor, whoever it is, it could be a nation state, it could be a mafia, it could be a cartel, it can be any number of people who just have the means to take that, and they don't even necessarily need to buy it, right? They can go to the whale wallets and say, all right, I've got a $5 wrench, or I've got SEAL Team 6, and I'm going to go and
how it's possible
and go take
to
your things.
over so much people. Like if you have a few hundred major holders in Monero, how it's possible to like seize all these people's money? I mean, it's practically nearly impossible, I think. And if we compare this opportunity to weakness of proof of work, I would say proof of work has more chances to be attacked than attack like a bunch of rich people, if we're talking about this. Well,
yeah, so I don't know that I've seen enough real world examples of that happening with proof of it being a nation state actor to believe that. No, what I do have is the receipt on 51% attacks that were successful. Bitcoin Gold, a couple of it's been 3-4 years ago now, where they were attacked and the attackers successfully got away with a 20 million or so double spend. It was a brilliantly executed 51% attack, right? It was, I mean, as far as like crime drama, as far as like how like the mechanics of crime, like you have to respect that they did it very well. But there aren't that many examples in recent history of 51% attacks being successful on networks like Monero or like Ethereum, even in its last throes of proof of work. The thing with proof of work that gives it that resistance is that there's a certain point at which coordinating the hash rate becomes a headache, and then sustaining the hash rate for more than a single double spend attack becomes a bit of a headache. And once you do, it does go into a contentious hard fork, and then the community decides, okay, why did we hard fork? And then
why community decides? I mean, community didn't have time.
Because you're the one that controls your wallet. You're the one that controls your wallet. So you just choose where you're going to spend.
Normally, community won't have a time to decide. What will be decided is algorithms that coded in the core by your team. And the attacker normally, he will learn this algorithm, find a weakness, like typical proof of work. So he create this chain, overcome it, and then it happened in a minute. The community won't be able to even figure out what happened because it's already took over. Because this alternative chain normally getting mined in private, nobody see it. Then he published it, and all the nodes are in the network are doing reorganization. It's gonna happen in a minute. A community won't even have a time. Even if they would have a chance to decide, they won't even have a time to decide. So that's why you focus on technology at first. I mean, from human factor, if we are humans and we are decide which fork you choose, that's gonna be working perfectly. But
right, so I guess the only issue that I have, Andrey, with the example that you set forth, because you're right, of course, and within minutes these things are executed when they're orchestrated correctly. They're executed without detection at first. But I mean, I think I'd need to see an example of a top tier proof of work chain suffering from this problem, because I don't think we've seen it in over 5 years.
Because it's top tier, because it's more expensive to perform the attack. It doesn't mean, like, we talk about, like, I want to like put aside like a political part. We talk about technology, which technology are the same.
And
like
I apologize.
Big project.
I apologize for the interruption. I want to complete that point really fast. Since we agree that these are top tier projects, originally when I mentioned the concept of technological Darwinism, that's where I was going with it. Proof of work makes sense in order to create a much larger body of hashing power. And I agree with you that for much smaller projects, it may not be the correct architecture to test things out.
Yeah, that's normally where this discussion about proof of work versus proof of stake comes to. And I've heard many times people say that crypto is not for small projects. Like only big solid projects can exist, and that's why they cannot be double spended because they're big. Well, still, I'm happy that Monero is a big major project. I would agree that it's #1 privacy project, and I really like that fact that you guys was able to build such a big, strong community. But what I'm trying to do is actually help, because to make the project stronger, you have to mitigate all potential attacks before they happen, not after. So even if we argue right now with the people who say that's never happened before, it's impossible. So I don't want to be right in the way that, okay, that's happened, now you believe me. Now nobody wants it. We can prove it, or we can discuss it from mass perspective. We can do the calculations that tells us how it works, how much cost would be. There is no such other. I mean, I can understand that the Bitcoin stands in a very different position, because Bitcoin is such a big, that's such a huge hash rate. So you won't be even able to find the free hash rate to perform the double spend attack, I guess, only if you, I don't know, if you're the government level player. But it's still, as we speak about technology, it still doesn't make proof of work better than proof of stake. It just makes Bitcoin in a very good position so far.
Yeah, so I agree.
That's my point.
Better is probably not the right word to use, but more costly is. I think we both totally agree on this, that the concept is making it the most costly and painful for an attacker, so that they're less likely to decide to attack in that way. And the issue that I have, maybe it's a uniquely American perspective too, just that we're so used to seeing financial manipulation here that I worry about specifically the only requirement being to have the money, not necessarily to spend it on materiel and on ongoing power costs in order for them to take control of the means of consensus. So, I mean, that said, also, is it possible that a nation state level actor could find the largest mining facilities in North America, maybe even internationally, and try to take them over? Yes, but then the operational costs of ongoing maintaining that expense. I mean, the game theory so far has seemed to play out largely in the way that Satoshi outlined it in the early writings. And I don't mean to like deify Satoshi. Satoshi is not God. Satoshi is not Muhammad, right? Satoshi is not Jesus, right? So, but Satoshi did have some really good points. You know, Nick von Saberhagen did as well, right? Some really great writings between the two of them. Some really good stuff, right? So it's good stuff to recur to, I think. Right, it's good for foundational arguments. But Satoshi talked about how the cost of 51% attack and the likelihood of being able to get away with very much in a double spend. And we've seen successful examples of it, good double spends. But generally speaking, unless you already have control of a very large wallet, vis-a-vis, say, like a large centralized exchange, I know it's a topic for another time. But they're a bad idea because of this, right? They're a honeypot for large nation state level actors to go take over when they want to commit a double spend. But yeah, as far as just
even easier, don't you think that's even easier because you have a proof of work, like physical devices somewhere located? It's make it even easier for a government to control it, because they just can come and seize it and put the people like in a uniform.
No,
and say,
I really
guys,
don't.
You do this. Maybe because I'm from Russia. That's
that's where I think that maybe there is a bit of an ideological difference here, because in the United States it's so common for our officials to work with much subtlety, right? To go and knock on someone's door and say, hey, we want you to change your opinion publicly, and that's it.
Yeah, I mean, I'm talking not about opinion, but about physical control. In a physical control, it's way easier if you have a business running on the land of some government. They will be able to they don't even need to buy it, or they just can make a law that gives you like some regulation that you have to follow because you're on the land, because you probably registered as a business. So for them, it's easier to put their hands to your. If they want to control it, it's easier if you have a physical hardware there.
Yes. Yeah. So here's where I think we're starting to agree even more. Andrey, the issue, and this is the issue that I had with my original thesis, is that here we're hearing a lot of politicians talk about ESG, which is God damn it, environmental, social, and governance. Sorry, I lost the acronym in my head, but environmental, social, and governance concerns. And what they're saying is we must conserve power, we must conserve all these other things for the good of society, for the good of the ecology, right? For the thinking of nature, for the good of the people, right? Government. But then not giving us very clear reasons why. My concern is that is propaganda to get us to give up proof of work. Why would they push so hard for that? And I contend it's because they've run through their capabilities. They've already modeled their capabilities, and they don't actually have the capabilities to fully take over proof of work networks, but they might have the capabilities to take over proof of stake networks. So they are pushing that agenda. And it is propaganda to get us to give up proof of work.
Well, I think it may work for a very limited projects, maybe like Ethereum, where they actually do it. But if we speak about technology, it's not accurate for technology. Technology is not about, like, we just use a wrong example as Ethereum is a wrong reference of proof of stake in terms of decentralization, because they probably sacrificed it to be more compliant, because it brings more money into the project. So they decided to go this way, which they do what they believe in. Yeah, okay. We believe in different things. We build a different thing. But if we stick about technology itself, I still believe that proof of stake is more protected from the government. It's more protected from centralization, and the players has a more skin in the game, which they have a really strong bond to the project. Our holders, we have most of our major holders with the project since the beginning for 5 years. They still support. They never sold it. So I think that's the great foundation for the project. And they help us. They give money, but they cannot control anything actually, because they don't have any real factor to control it.
Yeah, I love what in the comments VBits is saying about one of the problems with the proof of stake model of Ethereum and most proof of stake networks, these larger smart contract networks, where the cost of entry, the barrier of entry to running a validator node is a problem. And I agree with you largely, Andrey. I think that, again, I think that Satoshi did too with the redundancy of full nodes. And I think that more people should be running full nodes and essentially running a validator and a full wallet for more networks at home anyway, to give us better redundancy on every coin. And it does need to form more of the basis of consensus for more networks, right? Or bare minimum validation, even if it's not consensus, right? For writing the blocks, it bare minimum needs to do some validation after the fact. And not enough users understand this anymore.
Yeah, what I've learned from Bitcoin, when we were working on CryptoNote, it was the first new code base, and we were reading notes of different researchers, including Gregory Maxwell. He has a list of what would I do different if I would build Bitcoin now. And from this perspective, I think Satoshi didn't expect this to happen the way it happened. I think he was a genius. Obviously, he created the brilliant technology that was exploded in next years. But I think we cannot use paradigm from him, from his original work, because it didn't work the way he thought it's going to be working. You can see it clearly, because difficulty.
He essentially gave up as soon as GPUs came.
I mean, I wouldn't say he gave up, but
practically, his participation is measurably lower after the first GPU miner software was written.
Yeah, but still, I think everybody have a lot of respect, because what he did is amazing, and that's why I believe that we shouldn't be stick to some ideas to keep it like a whole ideas. We have to what we're trying to do is we always try to do calculations and math to figure out what attacks possible, how it's getting controlled. And for a small project, you feel the streets are more, they're more real. They're like really near you. And to protect yourself, you have to like think really a lot. That's why we're more vulnerable. We're more like sensitive to threats like that. That's why I think if we would be like a major 10 projects, we wouldn't care that much about consensus, proof of work works, because like
yeah, I want to ask you a question about that in a moment. I'll let you finish, but I want to ask you a question about that in a moment.
Yeah, I mean, it took so much job to rewrite core to make it proof of stake, because especially in this CryptoNode family, I mean, developers would understand that, because you have to validate to make proof of stake, you have to validate alternative blocks, and you have to validate transactions. And because of the way transactions are made in CryptoNode, you have to reconstruct the alternative history in the core, since this because you have indexes. You don't refer as IDB, you refer as index. You have to reconstruct. It was so much headache. It was so hard to build it, and we did it only because it was the only way to protect the user's money. Otherwise, being small project, you can. I mean, even Monero still. I think if you see Ethereum Classic was attacked, they had a really similar market cap as Monero, and I don't think Monero are in some position where you're not threatened by this. I think it's still possible.
I think that no, I don't think it's possible in the same way. I think so, at least for the case of Bitcoin Gold. And I don't want to go too far down this rabbit hole, because I wanted to ask you a relevant question for the Zano project. But in the case of Ethereum Classic and then Bitcoin Gold, which had a significantly lower hash rate than the next nearest projects using the same hashing algorithm, which is the bigger problem. When you've got a marketplace of available idle hash rate that could be directed at it, that's where there's a problem. There is no available idle hash rate for the RandomX algorithm that isn't already being used on Monero.
Yeah,
so
that's
like,
a good thing
and beyond that, as it is, I think maybe one issue among miners, right? We made the joke when Monero moved to RandomX that we're like, okay, cool. This is, finally I can go run a botnet and I can get all of the Monero, because, if you're good at taking over distributed systems, then you have a competitive advantage there. You don't necessarily have to pay for it, because, and again, like, I don't want to deify Satoshi, but Satoshi did talk about this being a vector, a potential attack surface for CPU only algorithms, in that running so-called zombie farms, he called them, right, of taking over somebody else's server network and then being able to force it to mine for you. But the question that I had for you, Andrey, was, if there were the prospect of being able to merge mine Zano with RandomX so that you benefited from the same security, or possibly even beyond that, being able to merge mine with a larger project with a much larger hash rate, a la Scrypt or SHA-256, what would prevent you from making that as a security choice, since they're already in production and they're unlikely to change?
Absolutely nothing. I think that RandomX is a great algo. I mean, the difference is only that Ethereum, that what we use at the variation of Ethereum POW is target to video cards, and you guys targeted for CPU. I don't think there is a difference which device you target. It's just basic idea that you target market device, so it's cheaper, so it doesn't make economical motivation to build the ASICs. So because you already are targeted to expensive and a mass market device, which CPU and video cards are both equally same, I think. And I wouldn't say there would be we sure, as whatever makes our consensus stronger is greater, of course.
Okay, phenomenal. Hey, Doug, I'm gonna throw this at our host really fast. Doug, you heard it here. You can tell the Monero developer community that Andrey has said, if they merge mine, then maybe Zano would make that change to RandomX, merge mine with Monero.
The word is out. Breaking news. MineYourBiz. What? Yeah, I just want to talk a little bit more about RandomX. Like, what is your take on this ideal of one CPU, one vote? Do you think that
it works this way?
is that well, the ideal.
I think Andrey and I will see this. We'll see very much eye to eye on this. It's a beautiful ideal, but I think it's a children's story. I don't think that it actually works that way in reality. I think that there are farms.
One CPU, one vote is never worked with, as far as I know, in proof of work, but it's amount of hash rate. We always do calculation hash rates. Doesn't matter how many CPUs you taken, you always measure the work. You always make the calculations over cumulative difficulty, which actually summary of the hash rate. And random mix is great work. I mean, as far as I know, it's perfectly fit for a market CPU, and as soon as perfectly for this particular type of device, it works. It's do its job. Did I answer the question, or was the question was different?
No, I feel very much the same. Yeah, it's fit for purpose, but it isn't. I think that it is probably it's probably not accurate to say that RandomX has resulted in one CPU, one vote. I think that there are larger farms. There are plenty of miners that are not running full nodes too.
I think, did they ever wanted to be one CPU, one vote? You can make calculations like that, but the amount of CPU will be always different. It's also the equal, like how much one CPU gives the hash rate. That's amount of his vote. That's the value of his vote. You can see it from this perspective, of course.
Well, I guess my question is: do you think that's something worth striving for? Is that the ideal proof of work, the ideal way to maintain the security of a decentralized system? What is? I know we're talking about proof of stake versus proof of work.
We can talk about terms of proof of work only.
What would be the ideal way to essentially control a decentralized network where it could be the most democratic is and egalitarian in terms of access? Do we think one CPU, one vote is that most ideal form, and striving for that?
I don't think that it matters to try to control it too much. I think when we try to control it too much, we have unintended consequences and blowback. So you can, for example, you can say, well, one wallet, one vote. Well, I mean, I'm not even particularly technical, but I can provision 15,000 wallets right now with a few keystrokes, right? And then control them. It's not that difficult. Andrey, who's very talented, can provision many more wallets than I can.
And one coin,
right?
one vote, guys. That's what matters.
Yeah.
Anyway, Anyway, the proof of work, it's actually doesn't like how much CPU you have, it's how much investment you make for the proof of work. It's just amount of investment you made to contribute to the network. It's the same. You can buy hardware with this, or you can buy coins with this if you want to participate in voting, if you want to be part of this. But when you buy the coins, you stick to the project, because you cannot use this project like if you talk about exotic case, you can't use this coins to participate in other projects. You stick to this project. But when you buy the hardware, you just use it to make money normally. You buy CPU.
Yeah, but that's a sunk cost fallacy. That's not always true. So that's the same game theory for purchasing ASICs, because it is a sunk cost towards one algorithm. It is different. It is different, but that logic is used by a lot of currently Bitcoin maxis for saying that, well, you bought SHA-256 hashing hardware, so you're not going to mine Monero with it.
Right?
You're fully invested in just that one business. Now with the coins, though, the issue is that they are liquid. Whether or not you feel like somebody may feel inclined to sell, it's still a liquid asset, right? Unlike the hardware.
What exactly? Sorry, I missed.
So buying coins for consensus. No, the coins themselves. Purchasing the coins, that's a liquid asset. So if at any point, maybe you have a bad quarter, maybe you have a great quarter, maybe the price manages to achieve a multiple in the market, and those who are staking right now say, you know what, the temptation to realize my gains in this investment is so great, I do want to sell. Well, who are they selling to? Do they have the same ideological reasons for staking as the previous owner may have? How do they realize profit? if you don't understand how if you don't give them the correct profit incentive and then give them the correct off ramp in order to realize that profit, then what happens to the consensus over time? Does it dilute? Do you require many, many smaller participants in order to have a much larger quorum for your proof of stake model?
Explain you this. That's a good question. Actually, that's a good question, and we learned a lot about this too. And like first of all, in our project, people buy coins not because they want to make a profit from staking, because the staking gives you really less, like not much. The emission itself is like 4% per year of all amount of money, of all emitted money. We emit about like less than 4%. Half of these coins, it's like 500,000, goes to proof of work miners, and the half of this goes to proof of stake miners. So if all proof of stake, if all coin holders started to do the staking, they will make less than 2% per year. It let us to keep a very healthy emission. We can emit really low. We don't put the pressure on the price. But the thing is, because 2% not much of a profit, the people don't do staking, because if you have a small wallet, it doesn't even profitable because it doesn't cover your electricity cost. So people are living from staking, and that amount of the coins that was given for the year spread between a smaller amount of people. So the percentage is growing, and it's, after all, you have equilibrium about, like, we have now only 60% of the coins are participating in staking. So there was equilibrium that like 5 or 6% of interest is equilibrium, where people are bothered to do actual staking. So this system always auto correlated to you have enough people to stake. If it's not interesting, they leave. The staking are rising, they come back, or not coming back. So like it's automatically find the equilibrium anyway.
I see there's some chatter, people responding to you saying, you know, the where's your evidence for that? I guess referring to the fact that, you know, it can be mined by bots. What's your response to that, Mind? I feel like we should have had Howard. It would have been great to have Howard Chu jump on. Howard, if you're out there and you're listening. Also, we have Arctic Mind that's been waiting patiently. I definitely want to get him up here so he can participate in this convo. But
cool.
I didn't touch the bots subject about proof of work. Actually, I didn't want it.
It's probably not convenient for your branding either, man. I think Andrey has had enough in his lifetime of being accused of dealing with botnets and distributed systems. So like let me own what I said, and that is just the memory hardness, the memory requirements for RandomX. They haven't currently outpaced the server capabilities of large farms. So I mean, I'm not saying that I can point to some sort of forensic evidence that like definitely this this hash rate that's on this pool is definitely coming from that server farm that's been taken over by a botnet. My point is that in terms of the game theory, it's not outside of the realm of possibility. And if it's not outside of the realm of possibility, somebody somewhere will find the motivation to do it if the incentive matches. And when you talk about being able to hash for free on somebody else's hardware, the incentive is there. So, I mean, it happens with the ASIC mining farms as well. Plenty of outside attacks trying to take over the hash rate of current mining operations that are in production. I mean, again, if you see a 5 megawatt farm hashing Bitcoin and you can manage to steal their hash rate for them and through a proxy attack, essentially redirect their hash rate through redirect their hash rate to serve your purposes, why wouldn't you? That's 5 megawatts of SHA-256 that is then a servant for you, not for them, even though they physically possess it. Right. So I think we do need to talk about some of those. There are other attack vectors that I think are more likely than, you know, armed men from the government knocking on the door of a 5 megawatt mining facility and saying, we own this now. It's always more subtle than we think. Right. And it's always more pervasive than we imagine. So yeah, I'm not going to apologize for saying that RandomX introduced the possibility, like however remote, introduced the possibility for botnets to become a reality in the hash rate for Monero. right, in securing the network. I'm not saying that it's definitely happening, and I'm not saying it's a bad thing. These are adversarial systems.
Do you see it as Arctic Mine? I don't know if you saw, I just brought you up.
Yes, I did.
Have you chime in here? MineYourBiz. I mean, do you see it as creating a base layer of security? These, potential bots that can mine.
Hash rate is hash rate is hash rate, and it's a self-healing system. It's an elastic system. The way that proof of work consensus operates, right? So we can scale up or down in the total net hash for the network. The more we have, the more secure it is supposed to be. And so without putting a value judgment on any nefarious actors who would try to steal energy and hardware, hardware utilization from a server operator, I'm not going to put a value judgment on it. It's probably immoral, right? It's probably bad. It's probably wrong. I wouldn't do it, and certainly I wouldn't want to get caught doing it. My point is that it is possible. The fact that there's an 8 GB memory requirement for XMR for RandomX is not a limiting factor for most modern server farms. It's not as limiting as most people believe.
How you see I didn't want to talk about botnets, but for me, the botnets are a concentration of the hash power in the hands of people who can act malicious to the project. We already know that the botnets are criminals. So how you feel about they can accumulate enough hash power to perform actual attack on the Monero network?
Well, I'd like to comment on this aspect, because there's one thing that especially with CPU mining that we haven't seen, and that is the question of the heat. Everybody talks about the power consumption, the value of the electricity. Nobody looks at the so-called waste heat that is produced in proof of work mining. And this is the one point where I think a lot of people are missing a very serious, important issue. And that is, if I have a home, I have a gas-fired, or I have electric heat, and I decide to mine Monero during the winter. If I'm using electric heat, there is zero energy cost up to the amount of heat that I need to heat my home. If I'm using a gas-fired or oil or something like that, there may be a slight differential. But you have a major favorable economic for decentralization simply because you have value in the heat. And this is, I think, one of the things that's giving Monero a very strong advantage against botnets and certainly against centralized farms. By the way, a botnet, if you're not mining, it becomes easily detectable. So one of the difficulties with a botnet is that you're competing with criminal activity, which may not be less detectable than mining. Mining starts producing heat. Again, you see and you start noticing that something's going on. So that's one of the attractions. But I think the question of the heat is very important. And it also goes to this question of ESG, that people are talking about energy wastage, of so-called wastage, I say, in proof of work mining. But the fact of the matter is, if you look at Europe, for example, the biggest demand for energy is during the winter months, and it's for space heating. And this is where the pressure, and a lot of it is electrical. So you actually can do proof of work in a decentralized fashion. And I'm talking people doing heating a home or a business without having an energy footprint as far as carbon consumption or CO2 emissions or environmental footprints, etc. And it's powerful for the decentralized percentage because the attacker has to use the concentrated mining farm. But the honest miner that is sitting in their home or heating their business by mining basically has free power. And I think that's one of the factors that is impacting Monero, is that it's quite uneconomical to set up a mining farm with CPUs if you're competing with a bunch of people heating their homes and businesses with maybe less efficient equipment that would sit idle anyway. And I think that's the element, the first point I wanted to make. The other point I want to make about proof of stake, and Andrey, I think, made some very interesting, it's not as applicable to small projects, but it's the question between the nominee owner and the beneficial owner. Now, in a small project, you're dealing with the beneficial owner holding the coins. The person who is actually the beneficial owner of that cryptocurrency are sitting in the wallet and they're staking it. And I can see how that can favor a small project. But when you have large amounts of cryptocurrency deposited in centralized exchanges or custodial wallets, these entities by nature are regulated and are obliged entities. They're the ones that are controlling the staking, and they're very, very vulnerable to government regulation attack. And I think MineYourBiz really hit on this, but I don't think we looked at the deeper question of the beneficial versus nominee owner. If somebody has coins in an exchange, first of all, there's a regulatory attack. Also, the exchange is in trouble. They may want to stake the coins in an adversarial way to the network in order to cause it to crash or to cause harm to the network. I discussed this as far back in 2015, where the allegations have been made in FTX that they wanted to crash certain tokens in order to get themselves out of liability. I've seen those allegations. And so what you have is that you have all these coins that are deposited in a centralized wallet or an exchange, which by nature has to be regulated, and it's an obliged entity, and then the government can come in and regulate them. And if the government doesn't regulate them, then you have the problem of an exchange going rogue, and they're running into trouble financially, and so they try to harm the network. Now, that's not going to be an issue with a very small project that does not have a large amount of second layer exchange trading. So I think Andrey's point is valid there in the sense if you're dealing with small projects, proof of stake is a lot more effective. But when you start getting to the Ethereums and the Moneros, in size, you have a real problem with these nominee versus beneficial owners. So I used to want to think some of the panel questions or thoughts about this, but anyway, that's sort of my comment.
Yeah, Arctic Mind, I really appreciate that additional context there of the nominee versus the beneficial owner, and having that be another layer of complexity to the ESG narratives that are being pushed, because those two profiles, right, or personae, they do wind up being affected differently by ESG being pushed as a narrative, because the more likely the more likely capitulation from that one owner profile versus the other. You laid it out so well. I appreciate that, and I agree with much of that. Proof of stake definitely can work. Definitely can work for very specific situations and circumstances, but it begs the question: at those levels, why not just do traditional fundraising and run a testnet? For a cryptocurrency or a blockchain project, why not get traditional funding and run a testnet to prove your assumptions, to go through and just create adversarial conditions and prove in various ways, and essentially just say, okay, no, we're a White House blockchain shop, and so we're pushing through all of these test suites. We're innovating new test suites to be able to come up with new systems, and then in the end say, okay, we've gone through whatever, we're at version 0.8 of our test suite. We think we're ready to run a mainnet. And then, yes, you figure out the correct consensus model at that point. But I see way too many projects that have been floundering, and I've been covering them for years now in a portfolio. They've been floundering at below $1 million market cap, or below even a $10 million market cap. And if this is the equivalent of, say, like a valuation of a company, you really can't run. I mean, that's like freelancer territory. That's not small business territory, even in terms of a corporate valuation. So I know this sounds very different from the sort of diehard cypherpunk free and open source software framing of the debate here. But there's a point at which you just have to ask, is it economically viable? Is it economically feasible? And if it isn't economically viable or feasible after a certain number of years, just like with a business, you're probably just going to do better by cutting bait and changing to a different model.
Guys, we traditionally try to go to the spaces to get questions from there, but we have so much talented up here talking right now. I don't want to move away from this. Now we got Bawdy that jumped up. He wants to ask a question. Bawdy, go ahead. And then anybody that's listening in a Twitter Spaces, maybe best if you just drop a comment, and if I see something there, I'll try to bring it up in the discussion here. Go ahead, Bawdy.
Hey, so I had actually quite a few thoughts on this topic. One thing is that I have a hard time seeing much of a difference between proof of stake versus ASICs. Almost every argument that you would make against proof of stake you can just slap that same argument onto ASICs, and it's basically the same thing. With one caveat, the big place that I see is proof of work mattering a lot more is when we're talking about the launch of a network. Because if you're going to go proof of stake directly, how do you decide who gets those coins first? It seems like proof of work is the only reasonable, like fair kind of way of doing that. And then of course, with CPU mining being the most fair way of doing that.
I was expecting this question, actually. That's a good point.
Yeah, well, and Andrey, I think in Andrey's benefit, I'm just going to jump in and say, like, that was exactly the launch mechanic and distribution mechanism that they chose for his project. So I think his track record proves that he agrees with you.
And that's pretty cool. It's really cool to hear. Yeah, so I mean, after you've gotten a certain amount of the coin mined, I don't know, I haven't like done any of the math on it, but I'm sure there's some threshold, you know, once you're mining some certain percent or less, you could probably switch to proof of stake without too many negative influences. Because at heart, so two things, money is a social construct in general, like just as a very broad kind of philosophy. And these are all social networks at heart. Like that's what these are. And it makes sense since, you know, money being a social construct. So I'm not entirely against switching to proof of stake, but it's just like, you know, there's such a big change, like could definitely pose problems. And the last thing I just wanted to bring out is that the whole OFAC and Ethereum thing, they started censoring transactions before the merge, before proof of stake. And that just had to do with miner extractable value and the ability to calculate the maximum extractable value. You basically need to be running a full archival node, and you need to have solid hardware so that you can calculate that within the 15-second block time. Is it 15 seconds? I think it's 15 seconds.
Yeah,
so people outsource that. Yeah, so people outsource that because you don't want to do that on your own computer, and it just so happens to be that the people that give you the most money, the most miner extractable value, they just personally don't include OFAC transactions. So.
Right, and to your point, also, I always bristle at MEV being called miner extractable value because it's another one of these narratives that was pushed forward by the Ethereum core devs. Right, they didn't like the idea of just calling it maximal extractable value, and acknowledging the fact that it was third parties such as pools, not miners themselves, not the hash rate providers, but it was pools and pool coordinators that had the necessary infrastructure, as you said, to be able to operate within that 15-second nominal block time. So yeah, there's all kinds of manipulation in Ethereum. I agree. It is not a perfect project, far from it. And with the censorship that went on by some of those parties, you're right. They had what they felt was an incentive to censor and to earn their fees some other way. I mean, if you can arbitrage value without having to provide any yourself, again, that's strong incentive. And it's not illegal. Wow. Now it's not even immoral, right? To just arbitrage value without providing any. MEV was probably a big mistake. But when you have a gas fee marketplace system, it's inevitable.
Well,
yeah, it was definitely completely unavoidable.
One thing I would say about Ethereum is that the block time so low, 15 seconds, you raise all sorts of other problems with what they call uncle blocks. And like I still remember in Monero when we went from 1 minute to 2 minute block times, which I think 2 minutes is very close to optimal. One of the main concerns, of course, was often blocks. And Ethereum has massive, they call them uncle blocks, a structure around that. So 15 seconds is really pushing it. I mean, you're starting even to get into relativistic effects just on a worldwide network. I'm kind of about the feeling that Monero is pretty well at the limit with 2 minutes. That's what you could do in a decentralized network. And once you start going significantly below that, you're going to run into problems.
Does that change at all with bandwidth improvements on like global bandwidth?
Well, it doesn't matter because global bandwidth is not your limitation. Your limitation is relativistic effects. I mean, you're going to get to a point if you start going to a second, just on the distribution of the blocks, you're going to have the problem that it takes 500 milliseconds just to send data across the world through fiber optic cables. And that is not going to change because you're dealing with the speed of light limitations in fiber. So it's not a bandwidth question. It is actually a latency issue. at that very level. So you can improve bandwidth and improve throughput, but you still have that latency problem of relativistic effects. Like I actually even learned about this when I signed up for the tickets for the Chaos Computer Conference in Leipzig in Germany a few years back. If you're in Canada, you have 150, it was about 150 millisecond disadvantage over someone in Europe. And I was kind of very successful in getting tickets, but a high fiber optic connection and everything. But you're leading with that server latency, which is in the 100 milliseconds range, 200 milliseconds. You start to get into the range. So that alone is a factor.
Yeah, I love that you're bringing this up as well. I saw Andrey kind of smirk about like, oh, nominal block times and et cetera.
Yeah.
I did a just for kicks. I think it was maybe 4 years ago, where I forked not Bytecoin but Turtlecoin with Rocksteady. Rest in peace. Who talked about that as far as like we just did a little hands-on. He was very generous with his time because I'm technically a layperson, but we forked a crypto note live and had to choose what our block time would be. 2 minutes does seem like, any lower than that. And at least as a as a complete layperson, you're not prepared to guard against any adversarial attacks against your network either. Like so many additional factors come into play with that, having your block times be too low.
Yeah. Can I make a few comments about that's what was said before?
Yes.
Yeah, the first of all, I'm glad that's been... Actually, I was expecting the strong points against proof of stake, which was never said, but was mentioned by ArcticMine. The really good point is when you have exchanges, centralized exchange, they can create a big concentration of the coins, and that could be a weakness point of proof of stake, which that's the good argument against proof of stake. I would agree with this, and that's the first of all. Zana is a small project, and the second, Zana is a privacy project. Exchange not really. They like hesitate to list us, so we don't have much exchanges, and I think it's gonna be getting worse. But actually, what we're doing is that we're trying to build DeFi inside Zana because of this, because we think it's exchanges will be pushing us out from listings, and it's more safe for proof of stake to have your own decentralized system that provides and generates liquidity inside it. I think that's important to mention. And also was a great point about initial distribution. And that's also a valid point about proof of stake. So where you have an initial distribution, and then people who reach gets only richer and richer, and people who get less money, they have no way to get more, because like the all goes to fractions. Like, and that's a really valid point. And we ourselves as a project, we are not in this position because we have a history with the proof of work for a long time. So initially, a lot of our coin was distributed with a proof of work. No one questioned this, but I agree. As we talk about proof of stake as a technology, itself, it's a valid point, and the initial distribution should be done in a smart way to avoid this. And second, the staking, the global profitability, like the global interest, should be as low as possible, as low as possible to keep network secured. By it should not be significant effect to make people who already own money more rich and more rich. That's what we also was trying to achieve in Zana. We put the really small percentage, so people who do staking, they not making much money from this. They just do the contribution to the network. That's I think important point to mention.
Hey, I have a question about a way that you might try and do proof of stake, so that you talk about if you can amass a significant amount of funds, then suddenly maybe you can start taking over the network. Could you do something where you incrementally reduce the block reward for for wallets that are larger and larger? Now I know that you would, hypothetically, you could just divide up your coins, a bunch of different wallets, but you also start running into cost there when you have to do transactions with, say, 10,000 different wallets. When you're trying to deal with, when in reality you're a whale and you're just trying to divide that up. Would that be viable? Is that something that could be done, or is that kind of not realistic?
Sorry,
Hey,
what is
may
the
I jump in
question?
and just offer an opinion here? So I know you're asking Andrey about specifically how he wants to craft his project, but I'm going to offer some pushback to that idea, Bawdy. That's functionally a tax on success. That's a tax on having large holdings. The libertarian in me is very much upset at your suggestion that larger wallets should receive fewer rewards just because they've amassed more coins. Anyway, just
sorry, I didn't get what is the question. Can you repeat it, please, or rephrase it somehow? I didn't get it.
So the idea, one of the problems with proof of stake, it sounds like if you have a single wallet that's amassed a significant portion, a significant percentage of the coin, that they could essentially control the network. They could start earning more and more rewards faster than everyone else. So then a design, just an idea, brainstorming, could you make it so that stakers, as their wallet size grows larger and larger, they actually get incrementally less and less reward? So like maybe if you have...
We actually have no idea who has, the network has no idea who has how much money. There is no such thing as a balance as it's in, for example, Ethereum. It's mentioned that anyone then can split the funds into like 10,000 different wallets, which would also work if we would have such a system. But in our system, there is not even possible to figure out how much on the balance, like same Monero, how much a particular wallet has on the wallet. All it's based on the probability of finding block depends on the value of amount on the output of transaction.
That's interesting. So you're able to maintain the hidden amounts feature, but without actually having to reveal the amount for stakers.
Yeah, that's that second developer who is working with me. He figured this out. That was like a magic. I couldn't even believe that it's possible to do this, but we did a review. We did also consulted with Sarang Netter, ex-Monero mathematician. He also helped us. It actually, Koi did a lot of help on this too.
Yeah,
Koi helped us to come up with a more optimal solution. Yeah, that's magic, but that's how it works. And that's really great. It's not compromise your privacy. So if Monero ever consider to implementing proof of stake, we would be more than happy to help in any way we can do.
What I want to say about the question of the large wallets, the problem is not a large wallet, because in a proof of stake environment, the large player has a bigger stake if that is actually the beneficial owner. The problem is that the network has no way of determining or detecting whether you're dealing with a nominee or you're dealing with a beneficial owner. And the nominee, in some situations, even without involvement of government, can be very adversarial to the network because the nominee might be short in a big way. And that, I think, is the concern that we have to look at here is how do you detect whether or not that at the network level, that owner is a nominee or is a beneficial owner.
What is nominee?
Nominee, it would be, for example, an exchange. Like if I deposit Monero with XYZ, with an exchange, and that exchange then, I use Ethereum as an example. I would deposit Ethereum in an exchange, and that exchange then takes my Ethereum, which then now become the nominee owner of the Ethereum. I am the beneficial owner of the Ethereum. So then they stake it as a nominee. They're controlling the staking. So the nominee is controlling the staking, not the beneficial owner. If you have a self-hosted wallet, you have your own wallet, the nominee and the beneficial owner are the same. But with an exchange or a hosted wallet, a custodial wallet, you put that funds in trust with the exchange. The exchange then becomes the nominee owner of the cryptocurrency, and they're the one controlling the keys and staking it. And that's where the problem arises. because the nominee may have very adversarial interest to the nominee has adversarial interest to the network, with the beneficial owner might not. And the biggest problem that I have seen with this is that if in a situation where the exchange runs a fractional reserve on the asset, and this is then that nominee has an interest in to stake the coins in order to harm the network. In a destructive fashion, and that's really, there's no way the network can detect that. So it's not about size of wallet. I think that's a big misconception to look at it from the point of view of the size of the wallet. The problem is who's ultimately the beneficial owner of that asset, and that the network can't detect.
Yeah, I agree with this. That's a great point. And as I told before, the exchanges as a point of concentration of users' assets theoretically create a threat to proof of stake if the exchange decide to act violent. That's why we've been asked to implement a delegation of staking, so people can just put money in some safe way. But we never always refuse to do this because we don't want to create any point of concentrations. So I think what you're saying is right, that exchange, if you have one or two exchanges, major exchanges that concentrate a lot of coins itself, they can theoretically be a bad actor. But as soon as you, for example, have in the Zana case, as we're building your own tools inside the network, decentralized tool for exchanging, that's mitigate this problem. Or also in case if Monero is a big project, you will have I don't know how much, but you obviously have a lot of exchanges. So it's also mitigate the problem. If you have at least 10 exchanges, that's not create one single point of a big centralization. Keep in mind, to perform this attack, you have to accumulate 50% of the whole supply, which really hard. I would hardly imagine would ever any exchange would have anything nearly close to this.
Yeah, I'm going to offer pushback against that point, against that assumption, and just say that when it comes to centralized exchanges, it may be true that you don't have one single centralized exchange, or that is in possession of 50% of the coin supply, but it could be true that you have a very small number of either centralized exchanges or just family offices for investment. They might not be exchanges per se; they may just be a custodian of some other type. But you can have just in some very small quorum of that sort of wallet profile, you could accumulate 50% of the token supply.
Yeah, but they
only be a half dozen.
Even those managing, they won't be making any malicious actions against the network because they lose money. It's only because exchange is a different point, because exchange doesn't own this money. They just custody it for the users. So if they screw up the network, the users of the exchange will lose the money because the value will be dropped. But exchange itself, okay. But if you have something like a family management or some guys, if they actually part of the group, they own the tokens itself, they would never do this.
So I think it's a dangerous assumption to presume that there's never a reason that a large holder will need to quickly divest. We've seen it too many times in cryptocurrency that there is either quickly divest or just quickly transfer.
That's a different risk. That's a different risk. But a very valid risk, and that is the fact that the large holder may need to divest for a whole bunch of reasons. In a classic example, let's say you have a very large holder that live in a country where there is capital gains taxes and estate taxes, and they pass away, and suddenly the estate has to divest the holdings all of a sudden. That's a thought that you may actually have to consider. The problem that I see with exchanges, and I think we're seeing this quite a bit in the FTX situation, is that there's a lot of contagion and linked accounts, etc. So you could see sort of all sorts of other problems with staked coins simply because of contagion between exchanges and counterparty accounts and so on. And the other problem, of course, is that player is now short or can be short in the failing exchange scenario, And that's the concern, whether they will attack the network. And it doesn't have to be 50%, 51% attack. I mean, you can still look at situations where, for example, the exchange is regulated, and the classic example that was given of Tornado Cash, and then regulators come in and say to the exchanges, you can't validate these transactions, so they slow them down, they disrupt the network in all sorts of ways. So there's all sorts of possible attacks that go short of the 51% attack.
Guys,
yeah, but it's not likely situation when exchange hold anything close to like even 5% of the coin supply. If you see the
closing time, Doug. Sorry, I'm sorry for the interruption, gentlemen. It looks like Doug is.
I have to jump in here. I'm torn right now from the great loves in my life. My daughter, who I have, who I do not want to disappoint or miss witnessing her giving this poem and listening to the sweet sounds of
we'll continue
you guys talking about crypto at this level. I am torn, but I'm gonna have to choose my daughter on this one. We're gonna have to cut it off.
How dare you, sir? How dare you?
I commend you. I think we had a really good discussion.
This is amazing. Anybody that's listening, sorry we weren't able to, do Q&A with everybody, but I wanted to keep the convo going with the heavy hitters up here. Anybody who's listening, please try to make your way down to Monerotopia. I know Arctic will be there, Bawdy will be there, yes. Andrey will be there. I don't know, MineYourBiz. What do you think, man? Can we get you down there?
What are our dates, and where are we in Las Vegas?
Mexico City.
Mexico City.
May 7th.
What are our dates?
6th and 7th. May 6th and 7th.
I know for a fact that I'm in Estonia a couple of days after that, but maybe
we'll talk to you. Maybe we can make you. Maybe we can convince you. Guys, we're gonna cut it off here. Thank you so much, everyone. Andrey, we'll continue to chat. Maybe we could do another spaces with you if you want before the conference. And thanks again, everyone.
Yeah, thank you very much. Thank you.
MineYourBiz. Maybe we can do Monero Talk too. That would be amazing.
Definitely.
It's an honor. Thank you so much.
All right.
Thank you.
Offline. All right. Thank you all for joining us. Have a great weekend.
Greatly appreciate it. Thank you, Bawdy. Thank you.
Cheers.
All right. Bye, guys.
Bye.
Thank you for joining us on this week's Monerotopia episode. We stream live shows every Saturday at 11 a.m. Eastern. You can find and subscribe to our show on YouTube and Odyssey, or listen to the podcast on iTunes, Spotify, or Stitcher. Don't forget to follow us on Twitter or join us in the Monerotopia Telegram group. See you all next week.